the price of gold back in the mid-1970s. And we're going to focus on both silver and gold today because I think silver is ready to really break out. There's some interesting technical indicators that are showing me that in the short term. Longer term, of course, I'm still very bullish silver and gold, only because I think the fiat currencies are going to continue to be debased. And we've got also kind of what you call inflationary pressures. Yesterday, silver almost got up to 33 during the day. That's the spot price. We closed, as you can see here, at 32.20. So they're still fighting. They're still trying to stop silver from going a lot higher.
The monetary system has been overinflated, much like today. Since 2020, M1 has surged and, despite a recent dip, is rising again without returning to pre-2020 levels. Gold and silver show similar trends to the 1970s, with silver especially poised for a breakout based on technical indicators. In the long term, both metals are likely to benefit from the continued debasement of fiat currencies. Silver recently hit $33 before closing at $32.20, with resistance from bullion banks evident. Mario Innecco is a financial analyst and commentator with a focus on precious metals. He explains on January 1, 1975, gold became legal for Americans to own again after being banned in 1933 by President Roosevelt under Executive Order 6102. This change followed the U.S. abandoning the gold standard in 1971. Which made it impossible to maintain the $35 gold price. As of now, gold has reached new highs, with predictions suggesting it could hit $2,500 per ounce by the end of 2024. Mario tells interestingly, COMEX began trading gold contracts on December 31, 1974, allowing settlements to start on January 1, 1975. Additionally, recent news shows that net long positions in COMEX gold contracts rose by 10%, marking the first increase in 4 weeks, according to the Commodity Futures Trading Commission, CFTC. This reflects growing bullish sentiment among traders as they position themselves for potential gains if the Fed cuts rates more aggressively. Let's explore the video in more detail. If you're finding this content helpful, be sure to give it a thumbs up and subscribe to stay updated with our latest videos. Right now, only 11% of our viewers are subscribed. Help us hit our goal of reaching 1,000 subscribers by clicking that subscribe button.
From January 1st, 1975, gold became legal again for the first time in, 42 years. Because, as many of you know, President Roosevelt in 1933 made monetary gold illegal. Yes, Executive Order 6102. But by 1975, after the U.S. left the Bretton Woods system, after the U.S. detached the dollar from gold, they couldn't keep that $35 price anymore, and they thought, why don't we just let the public back into gold? And it's interesting that on December 31st, 1974, that's when the gold contract on COMEX started trading. That's when it was created. And why December 31st? Well, because the settlement for gold is the next day. So you could basically legally have the right to have gold delivered from January 1st, 1975. So, and I'm going to show you, it's always good to look at charts. I'm going to show you a chart of how gold traded up to a then almost all-time high of just below $200, and that was just before January 1975. Gold, of course, it was kind of buy the rumor, sell the fact, right? People knew Americans were going to be able to buy physical gold in 1975, and lo and behold, gold started going down from 1975 onwards. An interesting letter, correspondence from the administration of the patrimony of the assets of the Holy See. In Italian is Amministrazione del Patrimonio della Sede Apostolica, or APSA is the acronym. And APSA is basically the central bank and the treasury for the Vatican.
Mario Innecco, on his channel named Innecco 64, exposes that the U.S. holds a significant amount of gold, though much of it is technically owned by the Treasury. There's no concrete proof of intentional price manipulation, but there are suggestions that gold was sold to suppress prices during the 1970s. Recent data reveals, as of 2024, the United States holds the largest gold reserves globally, with 8,133.46 metric tons, valued at over $630 billion. Mario Innecco highlights in early 1975, gold peaked just below $200 before dropping sharply, especially around August and September 1975. The Vatican and the U.S. Treasury likely benefited from this drop by selling high and buying back gold at lower prices. By 1978, gold rallied again, testing previous highs. Many investors may have been discouraged by gold's sharp decline right after it became legal to own in 1975. But inflationary pressures continued throughout the 1970s, making gold a smart long-term investment despite the volatility. Let's get back to the interview.
A lot of that gold is really technically owned by the Treasury, and I think he might have had problems convincing Congress that they needed to sell the gold, or he wanted to keep it on the quiet as well. And it's interesting as well that Mr. Argenteri notes that they're going to expand this relationship. So I don't have any proof that they were trying to manipulate the price of gold or drive it lower or lease it. They only talk about selling it here. But what I wanted to show you are some charts now of the price of gold. And I've showed you before the price of gold up to in the run up to 1975. And this one here is from beginning of 1975, as you can see, as we topped just below 200. And then I've put a little red arrow here. It says Paul Volcker and Benedetto Argenteri meet. That's the beginning of September. And the drop there was at the end of August, beginning of September. And we even have a gap down massively, end of August, beginning of September 1975. I'm not sure what happened in the markets that week. I wasn't even following the markets then. I was only about 10 years old or so. I didn't care about gold or anything like that. But as you can see, the market dropped massively. And 1 year later, it was almost back to 100. So I think Mr. Argenteri and the APSA, the Vatican Bank and Treasury, they did quite well here, because if they're selling it all the way down here, they can buy it cheaper and buy even more gold towards September, October 1976. But then, as you can see, gold rallied again and went to retest the all-time high, just below 200, by the spring of 1978. So what I'm trying to say here is, well, maybe gold would have gone down no matter what, not even if the Fed and hadn't engineered Paul Volcker with the Vatican Bank and others to sell gold into the market. Maybe gold would have gone down as well. It's the cycles, but maybe not as much. And can you imagine how many people probably got discouraged? People that were buying gold because they thought, oh, Americans are going to be able to buy gold now. And then gold almost halves in value in the first 18 months or so that Americans could buy gold. I think it discouraged a lot of gold bugs around, not just in the US, but around the world from buying gold.
The parallels between the current monetary environment and the 1970s are striking, particularly regarding the inflationary pressures on fiat currencies and the potential for gold and silver to serve as safe havens. As we witness rising trends in M1 money supply and the technical indicators for silver suggesting a breakout, it becomes increasingly evident that both metals may play a pivotal role in the investment landscape moving forward. The historical context of gold's legality and its price fluctuations offers valuable insights for today's investors navigating a complex financial system. What specific technical indicators are currently suggesting a breakout for silver? How might the historical context of gold ownership impact investor sentiment in the current economic climate? Feel free to share your thoughts in the comments below. Don't forget to like this video, subscribe to the channel, and turn on notifications so you don't miss out on future updates. Thanks for watching, and we'll see you in the next video.